But let's welcome on board our experts and figure out what they're making of this market and the kind of volatility we've come out with last week, the kind of consolidation at play today. We've got Kunal Bothra, Naresh Mirani, and Andrew Holland joining in on the fundamentals of this current market right now. But Kunal, let me start off with you. A hugely volatile Friday and then today's price action. A bit of a drag down, but again, it's not sharply lower or anything like that. What is it that you're making of trades so far?
Yeah, I think from a Freaky Friday to a mundane Monday for the markets, and I think more or less it's a range-bound market when we look at this on the index front. I think except for that intraday volatility which happened on Friday, more or less when we look at the last 5 days, 7 days trading action for the indices, it's been stuck into this 200 to 50 point band, for example, for the Nifty. Now, the good part for the markets is that the market breadth or sector participation, it keeps on improving with every zone where the markets consolidate. For example, last week we were looking at the first half of the previous week, we were looking at comeback from the high beta sectors like metals. Then we had a phase where the cement stocks did pretty well, and now we are at a point where the real estate stocks have started to pick up pace. So it's not as if there's any major sharp correction which is happening to sectors, but then on the legs for the market moves or the index moves, we're seeing fresh participation from different kind of sectors. That generally indicates that the market breadth is getting a lot more vibrant. So this also indicates that even if the index consolidates, the bias has to be on the positive side for market participants. So maintain the bullish bias on the index, and any kind of a dip, a 50 point to 100 point dip on the index should be taken as a buying opportunity.
Okay, Freaky Friday, Monday, and of course the Monday morning blues perhaps is what we are feeling, because there is this shades of blue in the studio right now, right from Kunal to Arsha and myself, and I think that's what the market is feeling as well. There is that mundaneness, as Kunal is putting it. Andrew, what's your view? Is it going to be mundane for the rest of the year? Because FIIs clearly would have checked out. And there's no major news to apart from, of course, Fed, which we are watching out for the next couple of days. Then it should be fairly quiet.
Yeah, it usually is. I mean, December is typically over the years has been good for the market. So I still think that the hope there is for that Santa Claus rally going into the end of the year. But I think as we've seen previously, when FIIs kind of move out for their holidays, it's usually the kind of rotation around sectors, and a lot of mid caps and small caps come into play. And I think that's probably going to be the basis of what we see for the next few weeks. So whilst the index itself might, not really do very much unless there's some big global event, I would suspect that that's what we're going to see is playing around at the edges. I still think that the big volatility is coming in January, when President-elect Trump takes over the US administration and what that brings with it. So I think enjoy what we have at the moment, where there's no real news coming in the next few weeks, apart from, as you said, the Fed this week.
Absolutely. But Andrew, suffice to say that pain period of the market at least is behind us. I mean, are we out of the woods or not quite?
No, I don't think we're out of the woods, because the catalyst for our markets to move higher is just not there because of a number of reasons. Forget global for a second. I still think the GDP forecast, which the RBI put out at 6.8% is too high, and I think it's nearer to 6 to 6.3%, which means that there's still got to be more downgrades, I think, to earnings in this quarter. So I wouldn't be surprised if January is when we start to see the earnings season unfold, we'll start to see more downgrades. Of course, there'll be some optimism towards the budget, but I don't think the budget's going to do anything to really help the corporates. It's really going to be downgrades across sectors, and I think that's going to be the key factor, which will probably take our market down, maybe towards. I think we're in that range of Nifty of 22.5 to 25, and I think we'll probably maybe try and test that 22.5 again as the earnings disappointment starts to unfold.
Let's see whether we test that level or not. But what is testing right now is Swiggy, because that one is testing gains of almost 9% right now. So just watching out for a big move on that stock. Of course, there have been slew of initiations on that one. Just Friday, I believe there was CLSC that came out with a initiation, and today Axis Capital has initiated coverage on that counter. So that clearly is doing well. And of course, Scenes which is their equivalent of district, is what they have launched for live events. So that must be doing quite well. And that One Black premium membership that they had announced also in the week gone by, all of this is coming to fruition for the stock price right now, with a gain of almost 8%. And of course, real estate as a pack has been doing well. Naresh, what's the sense on real estate, and which is the strongest chart you would say?
It has been Oberoi Realty, which has been holding on to new all-time highs and continues to even take a move today after some broker upgrades. That's the one. Second is DLF, which has made a strong comeback and is now back to the zone where it was facing resistance. Closer to 900, 920 has been a resistance zone for the stock. We've seen a good recovery at 819 odd right now. So that could be a stock which could actually break out in the whole real estate pack. And then lastly, it would be Godrej Properties, which is where we are seeing some bit of a recovery today and a small range breakout.
Andrew, what will be your take on the sector? Because time and again, this sector has seen either tailwinds or headwinds coming in as far as insurance is concerned. How are you looking at the sector?
It's not a favorite sector of mine, to be honest, within the whole kind of financials. I think, even though the banks have not really performed the way they have, I'd still be more kind of looking at that side of the financials and possibly asset management companies at this point, rather than insurance. I mean, I heard your news flow, but it still has to come through, and if it's not coming through, it's another disappointment. So it's not a sector that it's in favour with us at the moment. I think there's much easier stories to play out there than insurance, where the government does play and regulators could play quite a large role.
On that note, let's take a very quick break. Just look out for Angel One. That stock definitely seeing a bit of a cool off. It's down about 4.5% right now. Well, metals, of course, sectorally is the one which is definitely taking a beating. We'll discuss all that and more, but on the other side of this break. Back for closing trades right here in ET Now. Still a bit of struggle, down about 90 to 100 odd points and flickering over there. But the upcoming GST Council meeting, as we understand, in Jaisalmer, Rajasthan this weekend, can take some decisions relating to automobiles. Which one of the recommendations can make the second-hand vehicles, including EVs, costlier? The other one can give a relief to auto majors having SUVs in their portfolio as well. In fact, Sumit Chaturvedi joins in with some exclusive info on that. Sumit?
Well, two main proposals are going to be taken up in this weekend's GST Council meeting. In addition to bringing down GST on life insurance premium, these two relate to vehicles. First of them is increasing GST on second-hand or old vehicles, including EVs, from 12% to 18%. That is one proposal. If approved, it is going to make the second-hand vehicles costlier by around 6%. The other one could give a relief to auto majors that were reeling under pressure of a high GST notices which were issued to them on compensation cess. Well, this 22% compensation cess, there was ambiguity because of which notices, as automakers claim, were issued to them, and that's why they approached Finance Ministry on that. So we learn from sources this matter can also be taken up in this weekend's GST Council meeting. So these two separate issues will come up. One can make second-hand vehicles costlier, other can give relief to UV majors like Tata Motors, Mahindra and Mahindra, as far as vehicles and taxes on them are concerned. So these are two additional proposals, in addition to other items, and we'll keep on updating you all the items that will be taken up in this weekend's GST Council meeting.
Sumit, for that, we trust you to get us all those details. But in the meantime, Andrew, what do you make of the auto sector? Because there is that sluggishness which has come, which has creeped in. There is that chatter of higher discounts. Inventory still remains elevated. What's your sense on the sector?
I think it's a sector to avoid in the very short term. You just highlighted some of the headwinds which it's facing. Of course, within that increased competition as well. In terms of pricing and discounts. So I think it's going to be a tough time for the auto sector in the next, at least the next quarter or so. And of course, with consumption falling, I just think it's an area I don't need to be in at this point. And I think, the trade has been, more kind of shorting FMCG autos and buying new age technology because, they're the ones which are disrupting. So I think that's played out well, and I think it'll continue to play out well. So I think I'm going to avoid for the autos for the short term until I see some of this reflected in numbers by analysts in terms of downgrades, and that hasn't happened yet, but I think it's coming.
Andrew, what's leading to this sort of renewed vigor across the realty pack today? I mean, whichever stock you look at is currently on a tear. Oberoi Realty is now notching almost a 7% gain, Prestige up 5%, and so on and so forth.
So I think there's obviously some optimism towards interest rate cuts, going forward in India, maybe in February. And I think the real estate sector is something which we're seeing in the newspapers, all these huge deals that are going on, and certainly the demand is there. So you're seeing it across the board. So but I think it's again goes back to it's real estate maybe today and then tomorrow. Last week it was cement, and I think you're going to get this rotation now over the next 10 days or so till the end of the year with with FIIs away, and I think these themes will continue to play. So if you get a number of brokers all going and saying the same thing, which is what you've seen in real estate in today, it just pushes that momentum in the very short term. But I wouldn't be, again, I think these are more trading ideas than they are kind of long term kind of ideas at this point, because they've all done very well.
Okay, so that's the take coming in as far as some of these real estate stocks are concerned. But just shifting focus to what's happening in the market right now. Of course, Swiggy is doing well, but you also have KPR Mill perking up. 5-star business is doing quite okay. Nykaa in the last few minutes has managed to perk up, and some of the pharma names are also trying to, put their head above the water in that sense, because some of these stocks like Emcure, etc., are trending higher. But metals as a pack has been weak, and IT too. Naresh, what's your sense on IT now? It's time to perhaps take some profits the earnings season, or just stay put?
So I would be of the view that we stay put because some of the names are breaking out after 3 years. So you have Infosys, which was at this 1950 odd levels back in 2021, trying to break out. Something like a LTI Mindtree has broken out of a 2-year high. You have Tech Mahindra, which still has a lot more to go. So the structure is positive. We may see volatility for the results, and that could be an opportunity. If we get a gap down in some of the stocks on numbers, that could be the next time one could look at adding. Overall, new all-time highs on the whole index. And over 3 years of consolidation which has taken place, apart from a few names like Persistent or Coforge, which did really well, the rest of the sector, many names are still 10, 15, 20% lower than what they were in 2021. So there could be selective moves even from current levels.
Right. Okay. Let's take a very quick break on that note, but we'll thank Andrew on that note before we take a very quick break. Still at 24,723 thereabouts in the futures. Trying to recover a little bit. We have actually from the session lows, DRL, Innocent Bank, Axis Bank, Bajaj Finance, ICICI Bank, banks once again coming to the rescue. But Kunal, any closing ideas?
Yeah, so I think from the fertilizer pack, that's another sector which I believe looks attractive. Coromandel Fertilizer is something which is looking attractive. The stock trading just at the verge of a breakout around the 1800 mark and forming a bullish flag formation. So we'll look out for targets in the range of 1850 at least over the very near term.
Right.
Naresh, what about your closing strategies?
So it's the same one, Coromandel Fertilizer, one of the few stocks closing near the all-time highs. And the trend is strong in the sector as well. So expecting a move towards 1880 in the short term, stop loss at 1850.
Fundamental news from Coromandel, because of which the stock is reacting, is that they held the analyst meet and they've come out with some fresh targets with respect to the year. So we understand that they've talked about 40% increase in EBITDA per ton is what they're talking about. And this is on back of the expansions as well as the backward integration that they have done. And that's the reason the stock suddenly saw that shot up during the trading session, is now holding on to gains.
If you like this video, then like, share and subscribe to ET Now.